Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 25th through March 29th, where we'll try to help you make money trading in the spring. So again, this is part one of our weekly trading game plan for the trading week of March 25th through March 29th. And while we're here, I just love everyone's feedback as to our new header for our thumbnails. So please let us know if you like the new header for our thumbnails or if you prefer the old one. So please let us know. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of March 25th through March 29th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document with the notes in the description box below. Our notes documents contain links to bonus video, to the tools and resources we use to put together our weekly trading game plan, trading strategies, trade ideas, etc. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder. So you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to that Google Drive folder also in the description box below. So let's get started and we'll look at how the markets ended up on Friday. So we'll go to the home page of FinBiz. So we can see the Dow was down almost, was down 0.77%. Got a market on close, red bar market on close. NASDAQ pretty flat, up 0.2%. Again, red market on close. S&P down about 0.14%. Again, big red market on close. We had very few advancers, so only 31% advancers, 65% decliners, 81% new highs, 19% new lows. Still got 65% above their 50-day moving average, 34% below, and 68% above their 200-day moving average, 32% below. So even though this shows at the end kind of bullish, it was pretty flat on Friday. So we can see in the heat map, a few of the Magnificent Seven held up the indices. So Amazon, Apple, Nvidia, Microsoft was pretty flat. Tesla a little red. Otherwise, most of the sectors were red, except for also Google and Meta holding up. Again, the Magnificent Seven holding up the indices in general, but most of the other sectors mostly red. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. It says spring snow in Chicago. Well, I mentioned probably before, I grew up in Kalamazoo, Michigan, not far from Chicago, and we saw snow as late as Easter at times. I can say I don't miss that one bit. So if we look at some of the news, urge Americans to ditch natural gas, revamps S&P 500 targets after record-setting stock market rally. So as we'll see, where the rally continues after the Fed interest rate decision, we'll talk about that. Massive economic upgrade. Bostic now anticipates just one rate cut. So Bostic is one of the Fed presidents, tends to be a little more hawkish. So he's saying only one rate cut, although again, we'll talk about the consensus from the Fed interest rate decision and their dot plot. So Dow closes lower, but not his best week since December. Dow closes lower, dollar climbs, stocks book weekly gains. Sydney is asking if it's warm, and it's warmer today, Sydney, but we've had a little bit of a cold snap. It was cold and rainy yesterday, and I guess we've got another cold front coming in. So hopefully I'll be able to get some beach time this afternoon. We'll see. Welcome to Ricky Kahn. Thank you for joining us. He says it's snowing in northern New York too. So we saw oil popped up. I think it got as high as in the 82s, getting support around 80. So it's bouncing up off 80 support. Natural gas bouncing back up a little bit, so it's oscillating between 1.5, 1.7, and 2. Gold, we'll see in the futures, had a surge up over 2,200. It's been more volatile. Gold and silver more volatile, so it did retreat back below that 2,200 level. But we'll probably see further retests and possibly a breakout over 2,200. See the Dow and S&P futures are pointing lower, NASDAQ pointing slightly higher right now. DXY, the dollar, broke back up above 104. So foreign currencies declined. Yen's been relatively weak. We'll see that. And the treasuries had surged up in the 4.3s, and then Friday slightly retreated. We still got the 30-year at almost 4.4, 10-year at 4.2, and 5-year about 4.2. So very flat on the front end. And we had seen, again, a surge up in yields earlier after the Fed decision. So if we look at the major indices, and again, just a reminder, you can access these screeners via the links in the notes. You can also find them in the screeners tabs of our ETFs and Watchlist Google Sheets. So anytime, that was technology components. Let's do major indices first. Welcome, Gerald Pitts. Thank you for joining us. Hope you're doing well. So we can see all the indices, the major indices are very strong, particularly after the Fed interest rate decision. They stuck with the 3 cuts. We'll talk about that further. But again, surge breakout in pretty much all the major indices. Dow broke out strongly, retraced back to that upper trend line. We'll see if that holds as support, and if so, we'll see it, continue upward along that upper trend line. NASDAQ, again, bounced up, tested its upper trend line, got rejected slightly. We'll see if it bounces back down, tests its lower trend line. So in all of these, you can see these very narrowing channels. So I expect, just some volatility bouncing back and forth between these trend lines and an overall upward trend. Same thing with the SPY. We saw it briefly broke out, but and then retrace back to that upper trend line. Again, we'll see if that upper trend line holds support. You can see it's been, hugging this upper trend line pretty tightly. So I expect that to continue. We see this narrowing channel. So again, pretty tight trend lines on many of these indices. Russell's kind of a different story, as the higher for longer interest rates has a bigger impact on the small cap stocks. They really do need rate cuts. So we saw, when they held the 3 rate cuts, we got this surge, bounced off the upper trend line, got rejected, probably bounced down again to that lower trend line and that moving average. So again, a narrowing channel, but again, small caps are more vulnerable to the higher for longer theme. So we might see a more of a retracement correction possible in the Russell. Well, welcome, Gabe Fade. Greetings from London. No snow in London. So thank you for joining us, Gabe. Glad to see you here. So if we look at the technology components, so we see FANGs, the Magnificent Seven, the FANG stocks, again, exuberant run up to that upper trend line, somewhat of a rejection, again, narrowing channel, upward trend. Semiconductors had rejected. You can see these trend lines are a real good indicator for you to see, where there's possible support and resistance levels. Got rejected after a attempt at breakout, went all the way back down to that lower support level, bounced up, had a slight gap up. So you can see it's been, running back and forth between those trend lines. So again, I think, if you're a short-term day trader, short-term scalper, you can use these trend lines as a good measure to long or short. Again, these are all the long leveraged ETFs, the shorts, FANG D short, SOX S short. Biotechs, again, are going to be more sensitive to higher for longer, and you see that rejected. and then broke down below support. Now that lower trend line could provide a resistance point, so we could see further rejection. Also, this is starting to look almost like a head and shoulders pattern, which again is a bullish or a bearish pattern. So again, we could see more downside in biotech, but again, that's going to depend on any developments that come out. But again, this lower trend line and that moving average may provide some resistance. So again, the short on biotech is Lab D. TQQQ, again, as the main NASDAQ, it's going to follow that. Got rejected off the upper trend line. Looks like it's got support, lower trend line. So again, very narrow range, probably a lot of lateral chop. And the broader technology, the same. It briefly broke out of that trend, came back in, bounced off the support, got rejected off the resistance, bounced back down. Again, a very narrow chopping. So I, again, expect, just a very narrow chop in all the technology sectors. So I don't expect, any major breakouts. The trends, are all upward. But again, I think it's a narrowing chop in those trading channels, trading ranges. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for education and hopefully some level of entertainment purposes only. So let me grab a quick drink and we'll look at the group sectors and industries in FinViz, see what kind of sector rotations we can see and possibly take advantage of. Okay, if we look at the groups of sectors in FinViz, we can see really the only greens, the only positive on Friday were some technology communication services, which that's going to be Google and Meta. See the weakest sectors, real estate, again, yield, mortgage rate sensitive. The financials had a correction, a retracement finally. Basic materials somewhat negative. Utilities a little positive. So generally it was a defensive day with the exception of, Google, Meta, and a little bit of technology, probably NVIDIA. For the week, again, communication services the leader. Technology was positive. Industrials been strong for quite some time. The weakest, healthcare, real estate, defensive and materials, and utilities. So for the week, it was a risk-on day, again, spurred by the Fed interest rate decision and them keeping 3 rate cuts on the table. For the month, energy has recovered, been strong for the month. Basic materials, industrials, utilities, technology in the middle. Again, the weakest, real estate and healthcare. And for the quarter, again, for the season, technology's been strong, industrials, financials. So again, we might be seeing a correction in financials like we saw. Might be seeing a rotation into energy. And again, real estate's, the laggard, because again, yields continue to be high. So let's look at the industries. Welcome, Pawn. Thank you for joining us. Hope you're doing well. So not a lot of industries in the green, semiconductors, some utilities, uranium have rebounded slightly. So many more negative. So oil retraced back down towards 80, although it's got support at 80. A lot of the REITs, so real estate negative, again, as we saw. Coking coal is bouncing down. Looks like there might be some future opportunities in that one. I'll just pop that open while we're talking about it, looking at it. So we see several of these coking coal stocks rejected off their upper trend line. Here's one that we watched in the past. I'm keeping an eye on AREC. So METC looks like it's got a head and shoulders, so headed down. So that's a sector that maybe in the next couple weeks might present some opportunities. So I'm keeping an eye on that, keeping an eye on uranium. See gold and silver retraced, again, been highly volatile. So for the week, uranium was strong, utilities. Solar had a slight rebound. Again, they like the right cuts, but they're not coming anytime soon. So I think that's short-lived. Steel had a slight rebound. Negative against silver after it was volatile, broke up over, I think, 26. Gold broke up over 2,200, but slightly negative for the week. Again, more volatile. Silver and gold were strong for the month. Copper strong. Again, it had a slight retracement. We'll see in the futures as well. Oil, energy's been strong. Uranium. Weakest, again, coking coal has been negative. So again, see some rotation out of coal. So again, I think there's some opportunity coming in that area. Again, semiconductors, NVIDIA have been very strong. Again, we see utilities are strengthening. Copper. Again, solar for the quarter's been weak. Silver gold for the quarter's been weak. So again, we might see again a more resurgence, upward trend in gold and silver. Okay, let me open up the economic data calendar and investing.com. We'll go over some of my notes. Some of the quotes I captured from the Fed interest rate decision, and then we'll look at the economic data coming up for next week. Just a quick reminder, as soon as this economic data comes out, I try to post it in the Surf the Markets channel on our Discord. Our Discord is free to join. You can find an invite in the description box below to our Discord. Great place to get real-time economic data, as well as we can carry on conversations regarding trading, stocks, etc. 24/7. So I'd encourage you to join our Discord, participate. A lot of great traders sharing trade ideas, etc. You can see as this economic data comes out, I try to post a snapshot of it from investing.com. Also, the raw data as quickly as possible in the Surf the Markets channel in our Discord. Welcome, MD. Thank you for joining us. Hope you're doing well. So I didn't have anything Monday or Tuesday, and then Wednesday we got the Fed interest rate decision. So they, stayed pat at 5.5, pretty much as expected. We talked about this last week. We looked at all the probability in the Fed Watch tool and the Fed rate monitoring tool. There's a 97 or something % chance that they weren't going to do anything, which is what they did. I think this is interesting, though, their projections and their dot plot for interest rates going forward. As we see currently, for the current quarter, they're now projecting 4.6, was 5.4 for 1 year from now. It was 4.6, now down to 3.9. Second year was 3.6, down to 3.1. But longer term, it actually went up. So it was 2.5, now it's 2.6. So they're expecting, inflation to be stickier, be higher for longer. And so their 2% inflation target, take them longer to get there, a flatter curve in general, but they do expect it to come down more rapidly at this time. So here's some of the comments that I got out of the FOMC statement and their economic projections. Medium forecast shows 75 basis points of rate cuts in 2024 to 4.6. So that's 3 rate cuts sometime in 2024, again, down to an interest rate of 4.6. As we saw, the bond yields is still below that. So again, I expect bond yields to go up, prices to go down, at least to retest, a 4.5, 4.6 type level at some point. Inflation is eased but remains elevated. I think we all know it remains elevated. They repeats waiting for greater confidence on inflation to cut. So they're going to wait and see. They want to see more data. It's as we've talked about, as we projected, does not see rate cuts until it has greater confidence that inflation is moving back to target. We heard they're holding their 2% target. Powell has never wavered from that 2% target. They see fewer rate cuts in 2025 and 2026. So even though they kept to 3 rate cuts in 2024, rates are going to come down slower, and we saw that in the projections above. So from Powell's press conference, some statements he made: inflation is still too high, labor demand still exceeds supply, so there's still an imbalance in the labor market, and that would, they don't have to worry as much about unemployment in that case. Appropriate to begin easing at some point this year, so no time frame. They believe policy rate is likely at peak, so discussions of a rate hike, I don't think there's a personal opinion, again, not financial advice. I think there's no chance they're going to hike. They might hold off on cuts longer, but I don't think there's any chance they're going to hike. I think we're at peak rates, and it's just going to cut at some point this year from here. And again, it may be 2 cuts instead of 3 cuts. They're still projecting 3, although we heard Bostic said 1. So they may start backing off of that 3, and the market would not like that. They're going to slow the pace of asset runoff, so QT slowing, so slow the rate of their bond runoff off their balance sheet. So that would ease a little bit, and those work in conjunction in terms of restricted monetary policy. So that's slight easing, not quite as much as a cut, but again, some easing. Still likely, most people's view that we will have rate cuts this year, but depends on data. So they left it open that if inflation continues to come in hot, they might not cut. So again, they keep stating this. They've told us this for a long time. They're going to be data dependent. They want more confidence. They want to see more data. And the recent CPI and PPI data we got was slightly hot. So if it continues along that trend, they're going to push cuts off, may not cut at all. So Thursday, we got jobless claims data. So you see continuing claims, ups just very slightly. Initial claims, it was less than expected, pretty flat at 210K. And the claims 4-week average was up just slightly. So again, no major deterioration in the job market at this time. So again, Fed can hold their rates and not worry about higher unemployment. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So we'll go through the calendar in investing.com, see if I missed anything else. So we got building permits, housing, a little improvement, building permits up. Again, we did see a slight decline in mortgage rates. Housing starts better than expected. Bond auctions okay. Mortgage rates again ticked up. We have seen bond yields go up, but it's not significantly higher. Oil inventories were down more than expected. So again, we saw oil pop up, into the low 80s, got support at 80 now. So now we're in the low 80 range. Talked about the Fed interest rate decision. Talked about jobless claims. Natural gas storage is up more than expected. So again, that should put downward pressure on natural gas prices. Again, that's moratorium on exports out of the U.S. is, restricting sales outside the U.S. So again, depressing natural gas prices. Existing home sales up quite a bit. And again, now we're going to hear, we've got Fed officials starting to talk again, so we'll hear differing opinions. Did they think 3? Do they think 2, 1, etc.? So again, cause some level of volatility. Baker Hughes oil rig count dropped. So again, it's interesting. It had been climbing for about 2 weeks. The total rig count dropped. So again, the supply is being reduced. Prices went up. So expect oil prices to continue to be high. Also, we got the bombing of the Russian refineries, and so again, restricting Russian supply, selling to China, India. They probably then have to get some on the open market. So again, higher demand, less supply, higher oil rates. So next week, we got building data on Monday, durable goods Tuesday, home prices. Again, Fed officials talking Wednesday, mortgage data, oil inventories. Thursday, we get GDP data and core PCE, and jobless claims data. So Thursday, important economic data. Expected GDP expected to slow, but still be positive. Again, we don't have any risk of recession showing up. Again, positive GDP. So for fourth quarter. So if this is worse than expected, might cause some concern, but I think the inflationary data is going to outweigh, and the jobless claims data is going to outweigh the GDP data, PMI data, and then again, consumer sentiment. So again, this has been a little more important lately. The Fed wants to see that, the consumers anchoring inflation down, lower, nearer to 2%, below 3%. And last time we saw it was a little bit high, still at 2.9, so still a bit high. So we'll see if this comes out worse than expected. That might cause some volatility as well. Look at the earnings, see what we've got left. Should be pretty wrapped up with earnings. So again, you can go through the whole list at investing.com. Again, we should be pretty well done with this earnings season. Then we'll start into another one not too long. So you can see if there's anything that might impact you. There's a freight, yellow freight, Bluebird, another, I don't know if that's the bio or the bus company, natural gas, etc. So again, should be wrapping up this season, but you can go through the list and see if any of that is important or in a sector that you're trying to trade this week. Also, I put a link in our notes. Webull comes out with a nice graphic calendar. I think it'll come out tomorrow, but you can see the top companies by market cap that are reporting, and also a graphical version of the earnings calendar for the week. So again, you can see the major companies. They also have the major economic events. And again, I think they'll update that tomorrow. So again, you can access that in the notes. Reminder, the next FOMC meeting is until the end of April, May 1st. So May 1st, we'll get the next Fed official decision. Again, don't expect any cuts at that time. My personal opinion is that we won't get a rate cut at the earliest until June. That'll give the Fed, essentially a whole year of data to look at. And again, I think that might be a good time frame, June, July. Then they've got Jackson Hole in August. So again, my personal opinion, again, not financial advice, but I think we'll get a small rate cut in June or July, and maybe one in September. Also, that time frame gives them the opportunity to not look political, favoring either candidate, either party. If they do a slight rate cut in June, then see what happens, and they could talk about it more at Jackson Hole. And then if they want to do one in September, again, it's still far enough away from the election that it won't necessarily appear political. Also, you see we get an SEP another dot plot in June and another in September. So again, it gives them the opportunity to pair that with more data as to the justification for their cuts or lack thereof at those time frames. So again, those are kind of the time frames, in my opinion, that I like. Again, if you want to hear how we trade around earnings, you can listen to that video. So, and let us know your opinion, your feedback. When do you think the Fed's going to cut? Are they still going to cut 3 times? If so, when? Let us know in the comments below, in our Discord, etc. So let me grab a quick drink and we'll look at the market screen in Webull. Yes, Gerald, it's coffee time. Okay, so here's the market screen in the online browser version of Webull. We like this to see some of the weekly performance, so we could see in the histogram the number of decliners versus advancers on Friday was about 2-to-1 decliners, but the percentage of decline was very small, so we got a very long tail of advancers, but again, the majority of the decline was relatively small. We are getting some dispersion. Again, as we've seen on Fridays, although the NASDAQ was much more flat and actually looks like it eked out a positive inflow on Friday, whereas typically we've seen an outflow on Friday. So that's interesting, but a much more dramatic inflow into the NYSE on Friday. So that's interesting. That's reversed the trend we were seeing of a general outflow in the NASDAQ on Friday. So again, tech holding up a little more. Again, you can see the short-term earnings calendar here in the calendar section in Webull. So again, what's coming up in the very near term. We'll look at the best performing industries for the week. Again, you can look at the heat map for various sectors here now in Webull as well. Let's look at the industries for the week. Again, uranium strong, hardware, software, home building, autos, semiconductors still pretty strong. Construction. Finance, the least positive, aerospace defense, renewable energy. Let's look at the ETFs briefly. And again, we'll look at the ETFs in our ETF Google Sheet and see specific risk-reward profiles and performance, etc. So right now, it's short on small cap, short on the Russell. So again, as we mentioned, not getting rate cuts anytime soon puts more pressure on small caps. We do have down on the Dow. Looks like mid caps, short on mid caps in the S&P. Up on the NASDAQ, up on QLD. Short Bitcoin right now. Up on volatility, up on the euro. Again, short, small cap, short Russell. We'll look at some of these again in our part 2, some of the foreign currencies, foreign markets, also in futures. Let's look at industries. So most of the industries were red except for utilities, a little bit of defensive. Commodities, grain, it's like a carbon, sustainability, 25-year plus. So again, the long end of the curve, 25-year plus. So bonds, TLT was up slightly, bounced up, but again, as I expressed, I think yields are going to go up, prices go down at some point. And then once we get closer to a cut, then bond yields will go down, prices go up. Okay. So let's look at the futures in FinBiz. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. So as we can see, the Dow rolled over quite a bit. S&P pretty much flat. NASDAQ pretty much flat. Again, we can see, choppy lateral movement in the NASDAQ. S&P still, steady upward trend, just some chop. Looks like the Dow may be rolling over. It had this exuberant run, so we might get more of a correction in the Dow. Again, we got this correction in the Russell. So again, it's, potential more downside in the Russell, and we saw the ETFs point in that direction. Nikkei, again, strong run up. The Bank of Japan's removed their negative interest rate, so we'll see the Nikkei ran up, the yen came down, although it looks like it may have peaked, so this might be an opportunity. And again, we'll talk about some of the ETFs to trade the Nikkei and the yen. Also, the Euro stocks looks like it may have topped out as well. So again, looking at opportunities, possibly short that Euro stocks market. DAX running strong. I don't have a ETF to short the DAX, so we do have one long, but not short. Again, VIX just can't hold any kind of pop. So after the FOMC meeting, it had popped up in the 15s prior to the FOMC meeting and very quickly retraced down below 14. So again, we can see, VIX just can't hold any pops. It's sitting again now below 14. I think it may have even dipped below 13 at one point. Again, oil ran up in the low 80s, retraced. Now it's got support at 80. So I expect a bounce off that 80 support. Natural gas, I think that's the futures rollover, so it bounced up to 180. I think it's sitting at the 170s or so. Again, we got resistance at 2, support in the low 150s. So I think we'll just keep seeing this oscillation between 2 and 150, 170 or so in natural gas. Again, plenty of short-term trading opportunities using oil long, gold short. But I don't see any strong reason that it would break out at this point. Again, we see that resurgence of gold, slight correction down to about the 2150, which is support level. Then it popped up over into the 22s, pretty strong rejection, retracing back down. Again, this 2150 is pretty good support. I think we'll get a retest to that 2200 level and, an eventual potential break of that 2200. Again, the predictions are as high as 2600. And again, that level of volatility, that surge tells us there's a pretty good demand underlying this support level. So similarly with silver, again, tested 26, got rejected pretty dramatically. 25, it broke down below 25, so it's got to regain that support at 25. But again, I think the gold price and the gold-silver ratio will eventually pull silver back up as well. Copper rolled over, retracing again. It had a pretty exuberant run, so probably a healthy correction in copper. Similarly with platinum and palladium, ran up with copper, retrace. So I think, again, we'll see some support, some consolidation, then another upturn in copper, platinum, palladium, etc. Corn's been pretty flat. Cocoa's been crazy up. Again, drought in West Africa, limited supply. They can't fulfill their orders, so that, crazy trend in cocoa continues to be up. Somebody had asked if there was a ETF. There used to be one, I think it was NIB, but I think that's been retired. So I think DBA and some of the other agricultural commodity ETFs we've talked about may contain cocoa if you want to trade that. Nothing short. Again, we were watching for an opportunity to get into wheat. It did slightly retrace and then bounce back up. Again, we'll see if we get a slight correction. It's been bouncing up, and then although it may break out, looks like it might try to break out. So if you want to play that momentum, if you see the breakout, you can try to trade that with the WAT. Lumber's kind of flattened out at a plateau. So again, we saw that rebound and all of the bond yields or bond prices bounce back up. Again, I expect them to retest bond yields around that 4.5 level, especially on the short end. So I think we'll get one more dip in prices, test of higher yields at some point. Again, the dollar, DXY, up over 104 recently. And again, pressure downward on the yen. Again, we're looking for a potential bottom in the yen as an opportunity to long the yen. I was thinking of looking for some other ETFs to play some of these other foreign currencies, although if you zoom these charts out, even though it looks like it's a bottom, if you look at a longer term chart, it's still not, not at a long-term bottom. But I think I'll look for some ETFs to try to trade some of these other foreign currencies as well. So if you're a Forex trader, looks like some, opportunities, long opportunities coming when those swing back up. So again, if you're a Forex trader, we do have a channel in our Discord, so you can talk about Forex in our Forex channel in our Discord. Again, Discord free to join. So again, love to hear your opinion on some of those foreign currencies. I don't trade Forex directly, just through ETFs right now. So. Okay, let me open up our ETF Google Sheet and we'll look for ETFs to trade some of those opportunities. Just a quick reminder, if you'd like to get access to this ETF Google Sheet 24/7, you can get 24/7 access to our ETFs Google Sheet as well as our dividend payers and our puts ROIC options Google Sheet by joining our Patreon at the all access or VIP level. Again, as I've noted, once we identify a potential opportunity to long or short particular category, index, commodity, etc., then we jump over to our ETF Google Sheet, try to find the ETF with the best risk reward profile that we like, and to be able to trade that trading idea. So let me grab a drink and then we'll look at some new ETFs we've done some research on, and then if anyone in the chat wants to look at ETFs for a particular category, commodity, etc., please throw those up in the chat and we'll take a look at those. So. Okay, one ETF that we've added to the research sheet of our ETFs Google Sheet is this AAPX. This is one of the T-Rex leveraged long ETFs on Apple. The Crow mentioned this in the live chat of last week's part 2. So we didn't already have this one. We do have several of the other T-Rex long and short ETFs in our ETF Google sheet. So we wanted to take a look at this Apple 2X long. I haven't seen the Crow this morning. If you're there, so say hello. But again, otherwise, we want to take a look at that for the Crow. And again, another one that we can always use as a way to long Apple. So if I go in the research tab, I can either do a find. So there's AAPX. So again, you can find any ETFs, but just doing a find. See if we have it. If we don't, let us know if you'd like us to do the research on this. So it doesn't look like I filled that one in yet. So we'll go ahead and do that. So you can access the link to their FinBiz profile in the FinBiz URL. So here's the AAPX 2X long Apple. So you can see it's relatively new. You can see it's been, Apple's been under some pressure. Now they've got the DOJ lawsuit. So you see that big dip. That's probably the DOJ lawsuit. Slight bounce. So again, we don't have a lot of history on it, so it's a little bit difficult to see how this will perform relative to Apple. See what its expense ratio it is. It is optionable. Pretty low volume. We can see, it's pretty choppy. So again, something to consider. It's going to be choppy. Low volume may, gap up, gap down through your stop. So just be aware right now it's pretty low volume. Only 29,000 traded on Friday. See the composition. Again, I'm sure it's, Apple. So it's, Apple equivalent. $200% the daily performance of Apple. Again, it's leveraged. So right now, given the lack of history, all we can really do for a risk-reward profile for this is use the 52-week for both the support and resistance. And the top and bottom. So again, you can see the risk-reward profile is going to be 1.4 for any of those categories right now. You see what the current risk reward, it's got much less risk. Apple's way down. So if you want to try to play a rebound in Apple, this may be a great short-term day trade scalp way to trade a short-term bounce in Apple. See what other ETFs we have for Apple here. So again, if you do a search for Apple, you can see we've got several others. So you can short Apple using AAPD. You can long Apple. Here's a direction, which is a 1.5 leverage. And it looks like we had put a APPX in there before. Just hadn't filled it out. So again, opportunities if you want to short Apple, AAPD. If you want a long Apple, you can see this has a risk reward profile. Actually, it's a little bit better. Even the 52-week is a little bit better. So it looks like even this AAPU direction, even though it's only a 1.5, looks like it's been performing a little bit better than the AAPX. So let me know what you all think. Have you tried trading any of these leveraged long or shorts on Apple? If so, what do you think of them? How has your performance been? And what do you think of AAPX versus some of the direction long ETFs? So again, you can see the risk reward profile of all of those in our research tab in our ETFs Google sheet. Again, you just do a Control F, paste in whatever term you're wanting to find, and then you can see the ones we've already done research on. And again, there's AAPX. So again, let me know. And again, if there's any others that you'd like us to do research on, you can post those in the comments to this video in our Discord. Please tag us in our Discord, and we'll add those to at least the research tab. And then if they meet our risk reward criteria, then we'll add them to our main tab. Okay, again, if anyone in the chat has any particular categories, commodities, etc. you'd like to look at, please let me know. Okay, we've talked about, the ones to trade the technology components. So ARK and SARK, LabU, LabD, Bitcoin, the old Bitcoin futures base, BITO and BITI. I assume that's an individual stock. Gerald Pitts is asking about MBRX. Again, I assume that's an individual stock. Yeah, it's a particular biotech. Let me address that in our part 2. Again, I'd prefer to address individual stocks, and we can also look at the quarter's cash flow positive using our new biotech due diligence Google Sheet when we do part 2. Okay, Gerald? Okay. China, yin and yang. These are all regular coals. Talked about corn's pretty flat. I want to talk about Europe. So we saw the Euro stock market's pretty high, so we can see that EURL is close to its 52-week high. We're looking at this EPV as a possible way to short the Euro stock. So again, in part 2, we'll be looking at EURL and EPV. You can also look at the longs and shorts on the Euro there. Short-term trading on gold, GDXU, GDXD. There's also Dust and DZZ. You'll see these are kind of lagging. So even though gold was making a new high, these hadn't really made a new 52-week low. So again, there's some lag in these shorts. So if you're looking to short gold, I would look at the composition and find the one that you prefer, and also the lag effect in those areas. But long GDXU, again, these are gold miners. Lithium still pretty beaten down. Again, we do have a number of single stocks like NVIDIA. You can long or short NVIDIA. We have some others in the main sheet, Tesla, etc. You can find these in the main sheet, others in the research tab as well. And if you want to long or short the S&P, semiconductors, SOXL, SOXS, a silver long AGQ, short ZSL, small caps. Again, we saw some flow into TZA, which is the short on small caps. You can see the long. Solar, again, very, very volatile, very sensitive to rate cuts. There's to the Teslas. Bonds, if you want to trade the volatility of bonds, TBT short, TMF long, or you can just do TLT. We also got other durations, so you can see the risk-reward profile of those. Uranium, again, we saw a rebound in uranium, rebound in utilities. Again, volatility's been low, and we can see, we'll be looking at wheat again tomorrow, see if we get a slight correction, be able to catch a swing in wheat. Also, we talked about the Nikkei and the yen. So we're looking at YCL, which is a long in the yen. See, it's pretty close to the bottom. And then we have several to trade Japan, the Nikkei. So you can see the Nikkei long, EZJ. It's pretty close to its 52-week high. So again, we'll be watching the Nikkei, EZJ as a top, and then we can either short the Nikkei using EWV, or we can long the yen using YCL. And again, those seem to be pretty strongly correlated. We'll see if there's any break in that correlation, but we can pick whichever one has the best risk-reward profile, given a top in the Nikkei. Okay, let me get to our theme for the week. Let me grab a quick drink, and we'll talk about how to make money trading in the spring. We'll look at how the markets typically perform in the spring. Just a quick reminder, we've already released videos on how the markets typically perform in the spring, and typically the best sectors and industries in the spring. So you can listen to those short videos on how the markets typically perform in the spring and the best sectors and industries. So via the links to those short videos in the notes, and you can also find those on our BeachBum trading channel. Good morning, The Blind Trader. Thank you for joining us. Glad to see you. Hope you've been doing well. Okay, so let me zoom into this chart that shows us the typical performance of the markets. This is their new chart where they're breaking it down into segments. So we can see the gray bars are the past 5 years, orange past 10, etc., etc. So we can see this week was the first day of spring on Tuesday. So we can see for March, markets slightly positive in March, going into the end of March. Then we get a nice positive rebound in April. So again, markets, almost always positive in April historically. Then we get this drop off in May. Again, the sell in May and go away crowd. You see, it's been negative the past 5 years. Over 10, it was slightly positive. Longer term, just slightly positive. But again, we see the past 5 years. And again, I think that's the sell in May and go away crowd. And then we see a slight rebound in June. So back longer, it was slightly negative, very flat, but in the past 10 years, it's been positive. So we do get a rebound coming out of the sell in May crowd into June. So even though they say sell in May and go away, and I think their go away is till September, October timeframe, we do see a nice rebound in June. So going into April, again, upward trend, and then, a steep decline going into May. So again, protect your profits going into May and possibly look at short opportunities going into May. But again, right now, the trend is strongly positive going through the end of April. So again, that's how the markets perform in spring, positive into April, down in May, and then we get a rebound into June going into the summer. And then you see a nice peak in July and then another drop off in August. So again, end of June, we'll look at it for the summer. But again, looks like, these quarters we tend to get a nice peak and then a drop off. So I hope that all helps. Again, reminder, you can hear how the markets typically perform in spring and the best performing sectors and industries in the spring via those links to our short videos. And you'll hear things like, with the improving weather, people will have a tendency to travel. We're in spring break right now. Again, we'll get, the weather's improving. Hopefully, I know you all are getting snow in places like Chicago and New York, etc. But once that lets up, I guess hopefully the cherry blossoms don't get frozen in DC, etc. This is actually a cherry blossom icon. That's beautiful. Hopefully they, again, don't get frozen out, but again, you get travel. Also, people, spring cleaning, people start working on their homes, get outside, do their gardening, etc. So those are all some themes going into April. Also, we've got Easter, so Hershey will probably peak out, and your chocolate companies, although they're under pressure due to the cocoa prices, they'll probably peak out after Easter. And then I don't know of any chocolate consuming holidays much after Easter at this point. Also, we've been talking about how to make money trading in March for some time, so you can hear our strategies for how to make money trading in March as we wrap up March as well, and the performance of the market and sectors and industries in March via the links to those videos. Welcome, Lo-Fi Trader. Thank you for joining us. Glad to see you here as well. Also, as we've discussed, we saw these narrowing channels in all the indices. So again, I think watching the sector rotation, playing the sector rotation, particularly short term, is the name of the game. Better suited for, day traders, scalpers, short-term traders, finding, it difficult to find good swing opportunities. But, we were digging through and finding some kind of unique swing opportunities that we'll talk about in part 2. So just a quick announcement is part 2 of our weekly trading game plan for this week, which we typically do at 10 a.m. on Sundays. I have a prior engagement. I have to go to a friend's, or I get to go to a friend's retirement party tomorrow. So I will not be doing part 2 at 10 a.m. on Sunday. It may be at a later time, either this evening or Sunday evening. I'd love to hear your feedback as to, which would you prefer, whether it's later this evening, 7 p.m. Eastern, or later tonight. I'm not even sure. I won't be around tomorrow. Again, I'll be attending a retirement party for a friend and seeing some out of town friends I haven't seen for quite some time. So I'm not sure if I'll be available Sunday. I know I'll be offline at least all of the morning. So please let me know if you have a preference time. Worst case, I'll do it. Either record it late Sunday and release it as a premiere, or possibly very early Monday morning. We'll do part 2. And in part 2, we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also, we cover our dividend payers, our option strategies, additional ways to generate income while we wait for our top swing trading stocks to watch to set up appropriately. So again, we'd love your feedback. If you like the new header on our thumbnails, or if you prefer the older one, love your feedback on that. Also, any other ways that we can improve our weekly trading game plan videos, or any of our videos, any of our tools, resources, communities. We'd love to hear your feedback. Please put it in the comments of this video, or tag us in our Discord. Again, we're BeachBum Trading, all lowercase, in our Discord. Looks like I've got an imposter to get rid of, but again, all lowercase, no other characters or numbers, etc. And if anyone contacts you otherwise, so asks you for money or whatever, that's an imposter. Please ignore and report them. Also, you can always contact us via any of our social media links in our homepage, Our homepage is beachbumtrading.com, bum without the U. And again, you can find links to our Discord, all of our social media sites, etc., on our homepage, and always contact us with any questions, suggestions, or stocks you'd like us to research, etc. So thank you to everyone who attended today. And again, just a reminder, hopefully you're subscribed to our channel. Please hit the bell notification so you're notified. So again, once I can set a time for part 2, you'll get notified when that comes out. And again, it may be a spur of the moment release of part 2 once I know. So again, look forward to seeing you for part 2 whenever I'm able to do that. And otherwise, enjoy the rest of your Saturday. If you're watching March Madness, whatever, enjoying the spring. Hopefully, your weather will improve soon. And also, you can make money trading in the spring with some of these ideas. So thank you again for all your participation, and we'll see you again soon. Have a great day. Bye.